Today, we're diving into the most significant global news stories impacting our world. From sharp downturns in cryptocurrency markets to transformative regulatory changes in Asia, the landscape is shifting rapidly. Stay tuned for a closer look at these developments. Here are today's top 10 stories you need to know. Investor sentiment across global markets has turned increasingly cautious as macroeconomic shocks loom large. JP Morgan recently cautioned that MicroStrategy's Bitcoin sale policy may introduce avoidable risks. This sentiment is echoed by many institutional investors who are now weighing the potential impact of geopolitical tensions and regulatory changes on their portfolios. While some investors remain optimistic about long-term gains, others are taking a more protective stance, adjusting their positions to navigate the uncertain waters ahead. This cautious approach is evident as many institutions are reconsidering their risk exposure amid rising tensions between the US and Iran. Looking forward, the market will need to stabilize and regain confidence before significant investments can flow back in. In a significant move, Israel's central bank has signaled an intention to enhance oversight of stablecoins, acknowledging their growing importance in the global financial ecosystem. This decision aligns with recent regulatory efforts in the US and UK, where authorities are collaborating on cross-border stablecoin regulations to facilitate broader market access and ensure consumer protection. The increasing volume of stablecoins, now surpassing $1 trillion, highlights the urgent need for a cohesive regulatory framework that can uphold stability and build trust in this emerging asset class. Enhanced regulations could encourage greater adoption by financial institutions, paving the way for seamless integration of stablecoins into mainstream finance. As these regulations roll out, market dynamics will be closely scrutinized by investors and regulators alike, with potential implications for the future of digital currencies. Looking ahead, the successful implementation of these measures may reshape the landscape of digital finance significantly. In a significant crackdown on illicit activities, European authorities have seized an astounding $1.51 billion in assets linked to the crypto mixing service CryptoMixer. This platform was reportedly favored by various ransomware groups to obfuscate their transactions, making it difficult for law enforcement to trace the flow of funds. The operation highlights the growing commitment among European regulators to combat money laundering and other illegal activities within the cryptocurrency space, especially as digital currencies gain mainstream acceptance. As enforcement actions ramp up, businesses operating in this sector will face increased scrutiny and may need to enhance their compliance measures significantly. This aggressive stance may also deter potential criminal activities, fostering a safer environment for legitimate cryptocurrency transactions. However, it could stifle innovation if regulations become overly burdensome. Moving forward, the cryptocurrency industry must adapt to these evolving regulations, ensuring that they align with compliance standards while still promoting technological advancement. Japan's parliament has made a landmark decision by passing a law that reclassifies cryptocurrency as a financial asset. This significant shift aims to clarify the regulatory framework surrounding digital currencies, which have long been subject to ambiguity. By lowering the tax burden on crypto traders to a uniform rate of 20%, the legislation not only encourages local trading activity, but also enhances the legitimacy of cryptocurrency in a market that increasingly values transparency. Japan has historically been a pioneer in cryptocurrency regulation, and this reclassification reinforces its position as a leader in the global crypto landscape. Analysts believe that these regulatory advancements will attract more institutional investors, fostering a robust trading environment and stimulating innovation. Additionally, this move could inspire other countries to adopt similar approaches, potentially reshaping the global regulatory landscape. As Japan embraces this new era of cryptocurrency, the expectation is that the country will become a hub for digital asset development, paving the way for increased investment and technological advancements in the crypto space. Ripple has received a significant regulatory nod from Singapore's financial regulators, allowing the firm to expand its XRP and RLUSD services. This approval enables Ripple to facilitate token-based settlements for banks and fintech companies within the city-state. Singapore has long positioned itself as a global fintech hub, and this development underscores its commitment to embracing innovative technologies. The approval also reflects a broader trend in which regulators worldwide are increasingly open to blockchain technology, recognizing its potential to transform financial services through enhanced efficiency and transparency. As Ripple expands its operations in Singapore, it is likely to attract attention from other financial firms eager to enter this progressive market. The growth of Ripple's services could lead to increased competition and collaboration in the fintech space, encouraging the development of new solutions tailored for consumers. Looking ahead, Ripple's advancements may catalyze further regulatory reforms, paving the way for a more robust digital economy in Singapore and potentially influencing other nations to follow suit. The cryptocurrency market experienced a significant sell-off today, with Bitcoin plunging nearly 6% and trading between $61,000 and $62,000. This downturn was largely triggered by hawkish comments from the Bank of Japan, which raised concerns among investors about rising interest rates and their potential impact on risk assets globally. Such comments often lead to a ripple effect, causing investors to reconsider their positions in volatile markets like cryptocurrencies. The CoinDesk 20 index mirrored this bearish sentiment, revealing notable losses for major cryptocurrencies such as Bitcoin Cash and Polkadot. The current market volatility reflects a broader trend of caution among investors who are now reassessing their strategies amidst escalating geopolitical tensions, particularly concerning U.S.-Iran relations. These macroeconomic headwinds are prompting many traders to adopt a more defensive posture. Looking ahead, market participants will be closely monitoring economic indicators and central bank signals for signs of stabilization. Analysts suggest that a clearer picture may emerge if risk appetite returns, potentially allowing Bitcoin and its counterparts to regain lost ground in the coming weeks. In a notable shift, investments are increasingly flowing into AI tokens, with Stargate LLM emerging as a leader amid speculation of a 50x potential return. This surge comes as established cryptocurrencies like ADA and ETH have recently hit multi-year lows, prompting investors to reassess their strategies. The focus is now shifting towards real-world assets and innovative artificial intelligence applications within the blockchain ecosystem. Industry leaders, including Robinhood's CEO, have emphasized that the future of cryptocurrency lies at the intersection of AI technology and blockchain, which could fundamentally alter market dynamics. This pivot not only has the potential to redefine investment strategies, but also to drive significant innovation within the sector. As AI technologies evolve, their integration into blockchain applications could create new opportunities for growth and widespread adoption. Furthermore, this trend may lead to enhanced security and efficiency in transactions, appealing to both investors and consumers alike. Looking ahead, the collaboration between AI and blockchain is poised to reshape the financial landscape, paving the way for a more interconnected and technologically advanced economy. The UK's Financial Conduct Authority has conducted a series of raids across London, targeting 8 locations suspected of facilitating illegal peer-to-peer crypto trading. This aggressive approach underscores the FCA's commitment to regulating a rapidly evolving financial sector marked by the rise of digital currencies. Unlicensed trading poses significant risks, including fraud and market manipulation, which can erode consumer confidence and destabilize the financial system. As cryptocurrency trading continues to gain popularity, authorities are increasingly vigilant, recognizing that unregulated markets can attract criminal activity. The FCA's actions are part of a comprehensive strategy to enforce compliance, safeguard consumers, and promote fair competition among licensed entities. The impact of these raids may resonate throughout the crypto industry, prompting many operators to reevaluate their practices and ensure adherence to regulations. This crackdown could also encourage legitimate businesses to advocate for clearer regulatory frameworks that foster innovation while protecting investors. Looking ahead, the FCA's ongoing enforcement efforts may pave the way for stricter regulations, which could reshape the landscape of cryptocurrency trading in the UK, ensuring that it operates within a safer and more transparent environment for all participants. The sharp downturn in cryptocurrency prices can be traced back to recent comments made by the Bank of Japan regarding its monetary policy. The central bank's hawkish stance, which signals a potential tightening of financial conditions, has raised concerns among investors who are now apprehensive about the future of risk assets. This volatility has not only affected Bitcoin, but has also sent shockwaves through the altcoin market, with Polkadot witnessing an alarming 11% plunge. The reaction underscores a growing sensitivity to macroeconomic signals, as cryptocurrencies often mirror broader market trends influenced by central bank policies. Historically, the Bank of Japan has maintained a loose monetary policy to stimulate economic growth, so this shift is particularly significant. Investors are now recalibrating their strategies in light of these developments, indicating a potential risk-off sentiment across the board. The interconnectedness of global markets means that regulatory and monetary policies in one region can have far-reaching implications worldwide. As traders and analysts sift through the ramifications of the BOJ's comments, the focus will likely remain on upcoming central bank communications. In the near term, market participants will be closely monitoring economic indicators and potential policy shifts, which could further shape market sentiment and asset valuations. In a groundbreaking development for the cryptocurrency industry, Japan has officially reclassified crypto as a financial asset, significantly reducing tax burdens and enhancing trading legitimacy. This regulatory change introduces a uniform tax rate of 20% for crypto transactions, a strategic shift aimed at stimulating local markets and attracting foreign investment. Japan, once known for its stringent regulations, is now positioning itself as a leader in the digital currency space. Meanwhile, Singapore has expanded Ripple's operations, allowing for token-based settlements that further legitimize the use of cryptocurrencies in established financial systems. This move not only enhances Singapore's reputation as a fintech hub, but also showcases the growing acceptance of digital currencies within traditional finance. These regulatory breakthroughs represent a pivotal moment, having not just for Asian markets, but also for the global cryptocurrency landscape. As countries begin to embrace and regulate cryptocurrencies, the potential for mainstream adoption increases significantly. The ripple effects of these regulations could lead to enhanced market stability and investor confidence moving forward, as more jurisdictions recognize the value of integrating digital currencies into their economies. Looking ahead, these developments may inspire other nations to reconsider their own regulatory frameworks, potentially ushering in a new era of innovation and growth in the cryptocurrency sector. With Asia at the forefront of this transformation, the region is poised to set trends that could redefine global financial practices in the coming years. Thank you for watching today's top news stories. Which of these developments surprised you the most? Don't forget to like and subscribe for more updates.